All right, welcome everybody. Hello, and George Valle, good to see you, sir. We are here doing our monthly, what we would call it, a customer appreciation. Do we appreciate our customers? Most of you, yeah. The ones I don't appreciate are the ones that give me a hard time about my ponytail, the hard times, teasing me about my wife running the roost because I don't wear the pants in the family, little things like that. But anyway, other than that, Jerome, great to hear and see your name, man. Fond memories of you, Jerome, going out to see you. It is the COVID look. It's like, with the difference between me and the Nigerians, Petey and Johnny, is that they don't have hair on top of their head. So they hide it with the little tiny ponytail. I actually have hair on top of my head. So it makes me look pretty freaky with the long COVID thing. But it started off as a bet. And then it doubled down as a bet with a buddy who could wait the longest. And we were going to give whoever lost was going to pay the other's charity. And then we both were stubborn people. And this is my old pal from the floor back in the day, Stu. Anyway, keeping things real and not keeping anonymity as well. But anyway, the long and the short of it is we both were like, okay, for this ain't going to work. So write each other's a charity. Mine is the Fern House down here in West Palm Beach, and his was a dog shelter or an animal shelter up in, I think, Deerfield or Northbrook, Illinois, something like that. Anyway, my wife, Mary, said, hey, I kind of like the look. So who am I to argue? I got to get it cut, to be honest with you. So anyway, welcome to the PUG meeting. What do we do here at the PUG meeting? The PUG group was designed to help people better understand how we use the person's indicator, user group. And it could be anywhere from TradeStation, of course, to HGSI. And we do have a few questions on HGSI and what the heck it is and all that good stuff. And that's an obvious, easy answer to get. And I think we're doing something that's freaking things out. And then the third thing is, if I may be so bold, whether it's Genesis, Trade Navigator, anything that's got the person's indicators, that's what this is for. Doors open. Here is TradeStation. We have Thinkorswim, and then we're trying to bring in, here we go, HGSI, and then last but not least, our algo. Bring that in there. Don't get lost. The algo optimizer. There we go. So, all right. So, what do I got? I got good news and I got bad news. Oh my God, Bonnie, you just dated yourself, Fabio. Oh, see, now you're on. Tell Joe he's on my hit list for tomorrow. He's out. He's cut off. That's not fair. The Fabio look. Oh my God. The only difference, the guy was like, what, 6'5" and all buff and stuff. Whatever happened to Fabio? Now he's calling me Fabio. See, and that's why I said customer appreciation for those that don't tease me. Joe, he's cut off. He's out. You're in, Bonnie. You're still in. Joe's out. Anyway, just all good fun. Got to make it fun. Trading's probably, it's the most wildest times. And it reminds me, as I said in the trading room, either yesterday or today, this reminds me of the wild times in the late 70s, early 80s when commodities were flying all over the place. You know, sugar went to like 60-something cents. Soybeans were near 20 bucks a bushel. I mean, we are really in insane volatile periods, especially for U.S. equity markets. It's a whole new breed. It's a whole new thing. I mean, unusual option activity was a buzzword. Algos were a buzzword. Now it's Reddit. Reddit's the buzzword. If Reddit speaks, people listen. E.F. Hutton, you're out. Reddit's in. That's the way it is. But in the meantime, we try to make heads or tail. And what you see in your screen, or hopefully what you see in your screen, is our algo page that we project in our live trading room, which puts out trades, puts in stops. Certain trades will not kick in because if the risk is too great, it won't do the trade. We have the GBTC for those that were interested. We created that file back in, I think, 2017. This was the original model on Algo 17 or 16, excuse me. If I can go up to share with you, drawing, studies, edit, strategy. So you can clearly see this is the version 16. So we haven't altered this model at all. And then what we did is, because obviously we had algo 17, and this is double checking. It should say that. This would be we'll find out. Let's see. We go to studies. Yeah. Come on, person. We ain't got that much time here. Edit strategies. And this one should say 18. And there it is. System algo 17, version 18. What's the difference between the two? Well, I created this model, I believe, at the beginning of the year. You guys, I really don't remember. I think it was at the beginning of the year. This is the model on with the 18 version. This is the model's equity curve from, again, starting from March of 2019 through right now. So there you have a little over 2-year model. This is the same time frame, 2-year model. This is the older version. It's still profitable, but not as smooth of an equity curve. So as I like to point out to everybody in the PUG meeting today, I said I would share some of the results, or at least go over a little bit of why do I have 2 Bitcoin programs running at the same time. And the reason is because I haven't decided which one to drop. And we wanted to see the performance and give it at least 1 quarter of trading in front of everybody in real trading, to see which model has obviously got better risk reward, et cetera, et cetera. And we'll review that at the end of this quarter, which is in, 3 weeks or so. This is the SQQ model, and we do have a question about this. You'll see up here it's got this HB, hard to borrow. If you look at daily average volume on SQQ, you would say, how in the hell can that be hard to borrow? Well, it's an inverse leveraged ETF. TradeStation, you need to call them, and you need to explain to them, hey, I'm not a schmuck opening up a $50 account trying to trade a penny stock and trying to follow Reddit with 1 share of costs, headphone sets. And look at my account. I need access and see what they do. Talk to a guy. The best guy for this is probably Chris Walker in Chicago. Chris Walker in Chicago. I just wanted to throw his name under the bus because at this point, TradeStation's trade desk is so enamored with people calling. They've had a lot of, what I'd have to tell you as a disclosure, you are my clients. You are my friends. You are my let's say peeps. And I just wanted to tell you exactly, what reality is. There isn't a single platform, a single brokerage firm that's not going to experience outages or issues from time to time, whether it be the new guys, Robinhood, whether it be Tastyworks. I mean, they got their problems. If it isn't Interactive Broker, they had theirs. Fidelity's got theirs. TradeStation's got theirs. So deal with it. End of story. That's what we as traders have to do, deal with it. But you should always have somebody's name. And I just gave a guy's name, Chris Walker. All right. So if you have problems, you can say, and I'm not sure I can type this for everyone to see in the room, but I'm certainly working on it right this second. If you bear with me a minute. I had this all set. Darn it, I lost it. I'm going to type in. So we're going to start with TradeStation's issues, start with the bad, then work into the good. Cover not the bad, but cover what, listen, if you're in a trade and your system goes down or something happens, and you need to work on that problem immediately. So the first thing you need to have, and I would always suggest, is that you have the desktop app and then you have a mobile app, just in case. The third thing that you need to have is the trade desk number. Now, you may find yourself on hold for a few minutes, and there's nothing worse than having a system crash, entering a market order with no stop in this wild, crazy market, when the E-mini S&Ps, for example, in the futures, are seeing 14 and 16-point ranges every 5-minute bars. That's pretty crazy, right? I'm sure you would all agree. That's it's insane. So minutes count, seconds counts in this environment. And so if you can and you want to have a better discussion with someone that can help you with your problems, it's CWALKER, Christopher Walker, C Walker at trade TRADESTATION.com. I know how to spell, but I got this fat finger problem with my fingers. So anyway, Chris Walker, you want to email that guy. Email him and ask him some questions, number one. So you will have an issue. So the problem is a good Boy Scout plans in advance. Plan for Murphy's Law. Murphy's Law will always hit us right when it counts, right when we least expect it, right when we don't want it. It's like, you know, you don't get kicked when you're standing and running in a marathon. You only get kicked when you're falling down, right? Isn't that it? And that's it. So I just posted it in the room. If you can't see it, it's C Walker, C as in the letter C, WALKER at tradestation.com. C Walker at tradestation.com. I just posted that in the room. Why you can't see it, I don't know, Tom. Jaron, do you see it now? I don't see it, likely due to webinar mode. Oh boy. Well, all right. Let's try it this way. How's that? We'll do it that way. All right. So hopefully that's it's C Walker at tradestation.com. Say, hey, listen, man, I got some problems. This is what I need. And that's the communication that you can work with. And Chris is super. He's a senior business developer, and he can get things accomplished. And especially if you say, hey, I'm John Person's client. He told me to call you to reach out to you. That's it. Right. So, all right. So now you got mobile app, phone number for desk, email Chris Walker, reach out to him and say, hey, if I got an issue, is there a number, some better I can talk to one-on-one if I have a trade issue other than your trade desk? You know, and so you want to reach out and again, you want to develop a relationship. Now, Thinkorswim has a phenomenal trade desk. These guys are pretty damn good. But again, it's market conditions, it's internet connectivity, and all of this is what we're faced with. Now, just remember, when you get your emails that say, oh, somebody's got 1,000 winning trades in a row, trading is easy, and you only need 4 minutes per week to study the markets and to guarantee success as a multimillionaire, I'm going to say the email, if it sounds too good to be true, it probably is. Jokingly today, I said at the PUG meeting, I'm going to show a system that only risks 4 ticks to make $20 million every 14 seconds. That's the guaranteed winning strategy. And I'm going to sell that strategy for the low price of $199. But you got to act fast. Most of you should be laughing right now if you know me, and you know that's just not the case. Anyway, the real thing about trading is, you know, we put a plan on, we get execution, and we are working hard. I consider trading, it's better than digging ditches, but, you know, some of you might like to dig a ditch around your house on weekends for fun to get away from the computer. There's nothing wrong with ditch digging. According to Ted Knight in the movie Caddyshack, the world needs ditch diggers too, as he says. The point I'm trying to make is trading is hard. It takes money to make money. It's not as easy as it sounds. And there will be a day that we pay the piper. Our job is to make sure that if we can get into a trade, that there are external issues that can evolve. And we're dealing in a world right now where everyone's working from home. Internet resources are getting sucked like no tomorrow. And so with everyone jumping into a trade or on the open with these wild moves, we're going to have problems with companies' platforms. So be prepared, have backup plans, plan. Phone numbers, mobile apps, backup. And that's what I want to make sure that we covered, because we did have a question about, hey, you know, first off, I think one of our members had a question about what's going on with the SQQ and not being able to short it. And you can short it Now, they may not recommend it. They don't recommend a lot of things. But on the hard to borrow list, remember, they also had hard to borrow on the VXX. And I had to make a few phone calls to get the VXX to, was it, how many years ago was it? I don't know if Arthur's in the room right now. But Arthur, I think was it, or Julianne, it was like 2 or 3, I think it was you guys, 2 or 3 years ago. VXX was on the hard to borrow. It was like, guys, this thing's doing like stupid, like 40 million shares a day. You're either the village idiot or you don't know what you're doing. Take this off the hard to borrow list, or we're going to go find other brokers to do it. And so bottom line, they're like, oh yeah, you got a point there. So anyways, SQQ is not an illiquid product by any stretch of the imagination. And our algos do a pretty wonderful job, at least the one that we project in the live trading room with its signals. And by the way, what I had, as you can see, if it's green, it's a winner. If it connects the dot red, it's no bueno. So if you bought here and it stops out there, el no bueno. If you short here and it gets out of half and gets out of the balance, there's a green line: green good, red bad. Real simple. Anyway, the moral of the story is that when you're developing a strategy or a system, a lot of things, the first thing that you want to know is, does it have good back tests? Second off, am I in a market that's liquid? Can I get in? Can I get out? And now if I have a problem with it's hard on the hard to borrow list, what can I do about it? And just to make sure, you reach out to TradeStation and ask them. Another thing is utilize it as maybe it's an inverse ETF on the Qs. So if you get a sell signal here, you're getting a buy signal there. So that's another way of looking at things. We can always change that around too. All right. I wanted to cover the disclosures. I went way too much time into the build up, and I know that's not what you guys came for, but I think it is important because, believe me, when you take a look at stocks that are gapping up, gapping down, left and right, individual stocks, this is pretty crazy, and it can be. And again, the key word is it can be hurtful. So I always tell you guys, and I've always said this: risk management is the key to success. Position sizing is the key to success. Getting into a trade late. I don't like to chase trades. I definitely don't like to chase momentum trades. And when trading stocks, for example, this is a couple tools that I think when you use as confirmation, just to give you, and do rewind this part about the video, because to me, this is important. When you're looking at a stock, I always like to see if a stock's moving up, is it moving up with higher time frame? So whether it's monthly or weekly, is there momentum behind the trend? If there's no volume behind the longer term trend, it might only be a short-term trade. If longer term analysis reflects momentum, is power behind it, investors are behind it, institutions, it's going to show up by volume. This is Worthington Steel. It just happens to be up. This is on balance volume. And again, this chart is HGSI. One of the neat things about HGSI is the fact that it has this type of radar screen with all of our drop-down menu of signals, whether we want to look at how many daily buy signals there are. And what I always like to look for is are you in a daily buy, and is the weekly in a buy signal, or is it a weekly is in a high close doji? So if I'm looking at a stock that's giving me a daily buy signal, is the weekly in a buy? If it's yes, and you've got improving relative strength, it would be a contender for possibly me to look at buying. So the key is, how do you get these combinations right? If a higher time frame is in a buy and you got a little weekly pullback and then the daily goes back into a buy, that's positive. So let me teach you what we see here. And I just found this. I'm looking at this EBEX. I'm probably not pronouncing it correctly. I have no idea who these guys are. I probably should, but I just don't know. About 12,000 stocks now. Everyone, Tom, Dick, and Harry, and their brothers and sisters are all listing public companies, new IPOs, Bumble, Buzz, ETFs. Everything's new. It's crazy. It's pretty amazing the amount of things that we can trade out here now. What I'm looking for, if I don't know enough about a company on its fundamentals, I can spend a little bit of time due diligence of looking for it. But one of the things that I want to look for is volume, on balance volume rising, or is it just a simple, maybe short covering trade? This is a tool that everyone has access to. It's very powerful, and it is a part of our questions today, PMC. Now, I do a lot of these monthly PUG meetings on PMC and other indicators and histograms. So we record these, so they're really good. But I think it's also nice to review them. And one of the things that the PMC, which and as well, let's go over here to Thinkorswim. And let's get EBIX. Let's look at EBIX. This is our page of things that we're in. This is actually our trading room page. So let's take a look at, I'll mess this up tomorrow. Somebody remind me to change it. So for Thinkorswim, here's an on-balance volume. It's already on the screen on Thinkorswim. This is Schlumberger. I'll change the symbol to E. Was it EPIX? EPIX? Was that it? No, it was EBIX. EBIX. Was it EBIX? The hell was the name of the stock? I don't even remember. Yeah, it was this one right here, EBIX Inc. Whatever it is. Now let's go over here to studies and add a study and just go to John Person and go to PMC. Now, again, any stock, and this is exact same picture as HGSI. Let's double check. Side by side. There it is. Pretty on balance volumes on top, on balance volumes on the bottom. PMC's here, PMC's there. This is pretty much the exact same chart. So when I get a buy signal, one of the best buy signals that I like is if the longer term weekly and monthly were in uptrends with strong volume, I'd say, okay, this is a pullback and an ongoing uptrend, a continuation. Friends, the second thing I'm looking at is what does the volume look like? This got liquidated beyond belief. But the third and one of the most important things that I look at is the relative strength. And that's what this is. This is all this PMC is a relative strength. And it's as far as an indicator, I think it's another buzzword for a lot of people. Relative strength, relative to the S&P. Everyone's using this lately. We created this tool a long time ago. It's a momentum of relative strength. And it does something distinctly advantageous for traders. It tells you, and you see there's 4 colors. It's hard to see, but there's 4 colors. There's fuchsia, which would signify that the trend is going from weakening to strengthening. It's improving. There's red, which means no bueno. If you're long and it's red, it means that the market is losing relative strength. It's bad. If it turns bright blue, it means the stock is starting to improve or outperform. If it's dark blue, it says that it's starting to weaken. So you got 4 different stages a market is going to go from, let's say, maybe oversold to maybe improving. So if I have a market condition where the relative strength is starting to improve, I like that. It gives me a fighting edge in the market that it's outperforming relative to the S&P, and there's volume picking up into this market's trend. All right. And so clearly you can start to see that the relative strength is improving and the trend went mucho muy bueno. Now, whatever the company is, and I feel embarrassed that I don't know because all I did was cherry pick it. It was the first thing up on the screen. I grabbed it. Okay. But here's what I wanted to share with you that's very powerful about PMC that's overlooked, and everyone should know this. When a market rises, and even on balance volume, which has its flaws, it gives a lot of false signals in the sense that people might think that the stock is going higher and it's on great volume, when in reality, it's not that great a volume move. And then as the stock starts to go down, I think a lot of this would have been avoided by saying, and that's where the relative strength tool comes in to give you a help, is, by the way, with this big push up in the market, this big, huge bar that went up in EBIX. Why is the relative strength lower than when it was when prices were here? That's called a divergence, and the relative strength was actually not as strong as it once was, while prices are higher than it previously was. So for me, when I look at a stock like this, I go like, man, this thing took a shellacking. I mean, it went from 64 to 21 in like 3 weeks. That's a shellacking, whatever it does. It came back, it filled the gap. This is not a stock, and I would even look at entertaining and buying until I started to see the weekly analysis improve. Let's take a look. And at the end of the week, we might have a potential high close doji buy setup. Well, that's pretty interesting. The relative strength on a weekly higher time frame is not, it disimproved, but it ain't bright red. Bright red in trying to buy a stock on a PPS sell signal, gang, that's no bueno. That's not good. So I'm just going through how am I using the tools to help me in this, navigate in this market at times, and how do I do it with a, let's say, top-down approach? And that was one of the questions that we have to address that we were given this week is how do I do my top-down approach? The first thing that I do is I look at the advanced decline of all the markets. For that, I'm going to turn over here to back to TradeStation. I'm going to go to advanced decline. I mean, I live and breathe this every single day. If you're in our trading room live with me, I mean, I probably do this every single day. It would make me feel I wouldn't be able to sleep at night if I walked into the trading room and didn't start my job. I'd feel like I didn't do something, right? I mean, there's a checklist of things you do. And one of the checklists that you do is you look at the top-down approach. So first and foremost, when we look at a market, here we go. I look at the advanced decline. Now, today's action in the marketplace, I think Alton came in late today, and or maybe earlier today, I'm not sure. I started to talk about the advanced decline. It's going to need, for the Qs, the NASDAQ 100, a couple little things. I look at this and I go, all right, the volume histogram component was showing a little convergence. We stopped dead in a dime at quarterly pivot. That's important. But when the buying is evident and it's safe to buy in the Qs, like, you know, the trend is on, the game is on to the upside, bottom picking off a low is one thing. But we want to see improvement in the advanced decline. So moral of the story is, while today's advanced decline on the Qs was up, it's not in an uptrend, and it needs to get back into an uptrend. And an uptrend for me would be the advanced decline needs to get back above these little moving averages. And then I would say, all right, things are looking a little bit better. Volume action on this move. This was just maybe I would say this is not something that I would say looks sustainable at this point in time. It's vulnerable for another retest of the lows. There was really not a lot of volume in this. So again, certain tools I look at, and for specific reasons. If I'm trading any stock or stocks that are correlated or have a high beta to the NASDAQ 100, I want to make sure that that index has good representation and again, participation from the stocks that can be sustainable. Was there big volume in the move? Is the NASDAQ index healthy? And that's what these indicators help me to determine. So that would be number one step, is my top-down approach. Looking at the Dow Jones Industrial Average, a new high in price, not preceded with a new high in the advanced decline, is not as wholesome as one would think. And today the news was talking about a new high in the Dow, and it was nice because we had participation in Microsoft, we had participation in Boeing. But to be honest with you, we didn't make a new high close. That's very tricky. But if we would see a breakout and a new high in the advanced decline, and after all, it's not that hard to figure out. There's 30 stocks. I mean, come on. But if we can see leadership coming in the advanced decline where cumulatively more stocks are going up, that shows fresh money coming in. It shows more accumulation. It's a healthier market environment. Bottom line, that's what I look. Is the market ripe still for upside in some of these sectors? The Qs need maybe another day or two, and then we'll take a look at it. The S&P 500, though, it did not make a new high relative to where it made a high over here. This day we closed. Here's the advanced decline. How do I take this reading? I take this as a very positive item because it came close to its old high, and the stock market did not come close to this, or at least with the SPY. What is running the SPYs right now? Financials. You had today a goose from technology, building, and energy. So to me, I see more positive things coming for the S&P related stocks than I do maybe the Qs for right now today. I get all of that insights by looking at my top-down approach. Second off, this is a little tool that we created for you VIPers, and it was Sherman McClellan's McClellan Oscillator. But instead of using the McClellan Oscillator on the NYSE, which we don't trade, we developed the McClellan Oscillator based on the data from the S&P 500. Now, it's interesting. The advanced decline today, you can't get any more neutral than this. 250 up, 250 down. Holy moly. So we were at a neutral stance on the close today. We didn't have a negative day. We didn't have a positive day. It was just neutral. That's about, I mean, it's pretty bizarre, but there's the numbers. That's the reality. The McClellan Oscillator broke the zero line. And if we bounce off the zero line tomorrow and start to accelerate to the upside, this bad boy is making new highs. And that's all you can say about the essence of these tools. Stochastics, it went into an oversold position. However, it's at a point where it barely kind of budged in, relative to where it was overbought. And it's already at 58 in the middle of its range. What do I get out of reading the stochastics? It tells me it's also in neutral territory. It could easily hook back lower on a bad opening tomorrow and a bad day, or we have a chance that it's less likely to be. It's not as overbought as it was. It rinsed out excesses when it's in an overbought condition. So I would have to say I'm more positive based on these indicators and how I read them, and how I hope I can translate it, that it's not because I went to a bunch of Grateful Dead concerts as a kid and I just see colors. All I'm hoping I can do is to say, we created these indicators. Here's how I read them, and here's how I want you to read them. I think it's translatable so that it's teachable, that you could see and what this means. I think everyone can see this fuchsia color up here. The advanced decline comp ratio line is pretty much right at its highs. And the S&P futures, or excuse me, the Spider Cash ETF is not at its highs. So the theory is, unless tomorrow we crash and burn, if tomorrow we have another neutral or positive advanced decline day, the supposition is we still have a shot at a new high in the S&P 500 based on these readings right here. I don't think another thing that you could clearly see that happened today is the PPS generated a buy signal, an arrow. It showed that there was positive momentum that was generated today. So bottom line, as long as tomorrow we hold up, it still shows that the S&P is positive relative to the Qs. Qs might need a couple more days. If you just, in a simplistic point of view, where is the NASDAQ 100's advanced decline relative to its old highs? It's way off the highs. It's closer to the lows than the highs. So the point that I would make is that there's better strength, or the market's holding up better in the SPY-related stocks than the NASDAQ-related stocks as of today's PUG meeting. And that's how we're going to focus in on that stuff, okay? So when we look at, sector ETFs, so I'm looking at the markets, sector ETFs, what's holding up, what's not. Today we had a pullback in the financials. I mean, they only had like an insane FANG style type rally since December, right? I mean, that literally is a pretty decent run up. Industrials, by the way, which would be John Deere, everyone would say, but I would teach you something differently. One of my favorite industrials, ITW, Illinois Tool Works. Illinois Tool Works is a lot better. If you Google them, go to Yahoo Finance, look under what they produce, their subsidiaries, and what they make, you're going to be like, holy moly. This is a company for me that is the epitome of a working economy, right? So they make supplies and industrial chemicals and all kinds of stuff that is unbelievable. So Illinois Tool Work is more of my go-to guys for how the not domestic economy, but the global economy. As you can see, I mean, it really hasn't gone down relative to, well, let's say AMZN, which was kind of ugly, AAPL, which was kind of ugly. So we have a shift, a rotation, and in the marketplace. And again, Apple is in, while is in the S&P 500, we have more industrial stocks in the S&P 500. So when I go down and I look at what am I looking to do, I look at seasonality. I look at, again, more importantly, that top-down approach, and I utilize these tools. On my radar screen here, I'm looking at stocks that are generating buy signals. And by the way, what is today? It's only Tuesday, right? Well, look what's blinking. XLF had a down day, 1% down. Well, that sucks. We're in bank stocks. Person, you're an idiot. Well, the week ain't over, number one. And just because you're in maybe the market gave back a little bit from yesterday, it still is, last I checked, in an uptrend. So maybe perhaps more of a pullback in the financials would be, in my humble opinion, a buying opportunity. So again, it starts left and then work right. This is the financial ETF, XLF. And this is a monthly chart using a special volume indicator. It is showing, just as I've just been saying, start left, work right, work with higher time frame and then lower time frame. It's showing there is accumulation in this market with higher time frame participation. So I would not be afraid of where price is here and rising moving averages there. I would not be afraid of buying an intra-week dip. And this is one that I would say, if you get a 60-minute buy or more importantly, a daily buy, if it falls and then goes into a daily buy when the weekly and monthly is in a buy mode, that's your setup. That's the big thing. Now, here's the cherry on the table. All right, here's the big winner for you. XLF. If the relative strength is still strong, it means, and the volume trend is still good, then that means dips are probably going to be bought up still in this market. What I get nervous of, listen carefully, what I get nervous of is when a stock or a sector or anything that moves relative to the S&P rises and makes a new high and the relative strength weakens and there's no volume, that is no bueno. That is a short, avoid the sector. Something is wrong. Clearly, you could see the market generated a sell signal. There's no volume. And the market dipped one day and then came back and closed higher than any previous close. That day right there, which was 210 of 2020, a year ago. Even before the whole thing wiped out, by the way. This is a weekly chart on top of it. 2 weeks before the market wiped out, it was already showing negative volume and relative strength had already been weakening. It was red. So if you're looking at buying something and you go, hey, it's a buy signal, I got to get in. The first thing that you want to do is, what is the relative sector doing? If the S&P 500 doesn't have great looking advanced decline, think twice about that. Dig a little bit deeper. The first thing I want you to look at is, what is the relative strength of that sector doing? If the market of that sector or that stock is breaking out to newer highs and the relative strength is weakening, trust me, somebody is going to put a slap you in the face trade on you, and you're not going to be able to recover because you're more than likely, unless you use stops, more than likely going to have problems. So again, relative strength, which has created, I think, a beautiful picture. And just to teach you these little nuances, a price closing high greater than prior highs, and you don't have volume making newer highs, and your relative strength is in the red mode, that's divergence. And that is a stay the hell away. Do not buy the dip until things get better and you start to see improvement in the relative strength. Now, on a weekly basis, yeah, you could have picked the bottom and bought the bottom here, okay? Or you could have bought the rally and then you would have taken pressure. But when did it really become an easier trade with lower risk? Right about in here, when the relative strength started to really improve and volume started to come. Look, you didn't catch the market at the low, but when you bought it with improved relative strength and improved volume, you had a better trade. Why a better trade? This was improving fuchsia, and you're going to buy it here. And where's your stop going to go? Underneath the bar's low, underneath the prior bar's low, that's 2 weeks, below the gap level, maybe. What kind of a risk factor is that for you? A little, I mean, that's a lot bigger than over here, or waiting to see if the trend continues. So I would rather get with the trade, maybe because I'm older now and I'm more risk adverse. And I would like to say, hey, I'll get into the trade when I see a trend evolve and the trend is starting to accumulate positions. And we did this, by the way, in a stock many of you know. We did this with Morgan Stanley. Now, I didn't say I'm the sharpest knife in the drawer. I didn't say that. But let's review this small little company, Morgan Stanley, which in our advisory service in the trade room, we took. We bought the stock. And then we bought a call spread, remember, to 55.65. And then, you know, we got out of that. And then, unfortunately, it kept going. But we're not stupid. We associated ourselves with other trades like Truist Financial, which is BB&T and SunTrust Bank. All I did was convert one trade to another in the same sector. By all stretch of the imagination, this was a trade. The relative strength weakened. But all of a sudden, you started to get an accumulation of volume action that was looking pretty healthy, and then the relative strength started to improve. That was Morgan Stanley. This is a little doohickey sell signal. How bad was it? Well, this is the kind of thing that we're seeing in the market more and more and more and more. They're called equal and opposites, dumps before pumps. Just to prove a point, JBLU. This is brutal. I mean, absolutely brutal. It was good for us because we had orders resting down below to buy the dip. I didn't even think we were going to get filled at 1730. Was it 1732 or 39? 1739. We had orders resting. We were looking for the market to pull back to pivot support. I don't know what the hell happened on Friday, but they dumped it and then just jammed it in front of everybody and then just took off without you. At this point, if there was ever a trade that I would say, am I interested in maybe tightening the stops or getting out of, now that we had this big little rally up in here, was there strong conviction of volume? So looking at a daily chart, I'd say, wow, market's rising relative to its old peak. Relative strength is, what would you call this? Improving or flatlining or disimproving? I would say disimproving because the bar just turned dark blue. So it's showing near-term weakness. If you're in a stock, it would tell me, and you bought it here and it's up there, unless you really want to get married to this trade, have a deeper stop. But if you want to be a swing trader and take some money home, raise your stop. This is a condition, volume and relative strength, that doesn't support said trade. I wanted to share this with you because this is real stuff that we do. And more importantly, it shows exactly the type of treachery the market is demonstrating. That was not a glitch. That was a real scenario. What was there any reason for this stock to go from 1860 to 17 bucks back to 1859 all in one day and then explode like this the very next day? That's insanity. My guess is somebody probably bought it wrong, had stops, got liquidated, and that's just part of the problem with the markets. If you bought it here and you had a stop underneath a swing low, they knocked you out, and then that's the kind of thing that's happening. It is pretty wild, but I would just tell you this, from a longer term perspective, let me just share with you, weekly chart. Holy shnikes, Batman. The volume broke out to biblical proportions. So tightening a stop on a daily chart makes sense. The market up near an old high might be cause of why the daily chart is showing relative weakness. So again, look at the daily charts, fine. Yeah, you got to, right? But don't do a disservice and not review the higher time frames. It'll give you a different perspective. When the relative strength is outperforming a market like this, and the volume is off the charts, that's where I look for the trades that I do. And by the way, we are in JetBlue. Why? Well, I'm sharing why. There it is. The new book, Thomas L., thanks for your question. And this is time for questions. The new book is not a new book. It was rewritten. It was a second edition and is available on Amazon as we speak. It was finally done. And you know what the funny thing is, everything I'm sharing with you right now is in that book. I'm pretty sure. Hold on. Now, I didn't do this. It's not me. Don't blame me. It's John Wiley and Sons. The original book was hardcover. Times are tough. It's COVID-19. They made a paperback. I don't know why. I didn't know. I was freaked when I got my copies. But determining market condition, breadth, volume. In fact, everything that I just talked about, especially with the volume, is on page, or at least some of this information with OBV, page 87. You don't have to read too far into the book. It's about 80 by page 87. There's really some phenomenal things in there. Thanks for asking. And, you know, I generally don't promote myself that often by saying, go run out and buy my book. But in this case, I'd say, go run out and pick up that book. It's awesome. It really is. It gives you an edge, unless you're doing better following Reddit traders. And then just stick with that. Because I got news for you, man. That's pretty crazy stuff. I got to give credit where credit's due. And we covered this today. Let's take a look at GameStop, just by the way. So here's everything I was teaching you. As you can see, we've done it. Back in September, man, people were building this trade up like way, way ahead of. I mean, this wasn't something new. And the relative strength has still been outperforming relative to the overall market. Let's change this over to a daily chart. In fact, I just did this with the live trading room the other day. So again, the market starts to make a high and it's outperformed relative to the market. That's great. And it did. And I mean, obviously anything that goes absolutely ballistic. And this is what's really cool is before it even took off on January 11th, we had a PPS buy signal, relative strength improvement. Hard to see it because, well, it's hard to scale something of this historic magnitude. But, you know, how many people have heard me talk about when the daily pivot's above the weekly or the weekly is above the monthly and the market closes greater than on an improved relative strength volume? I ought to have my head examined. In fact, I openly admitted this to everyone in my live trading room. This came up on my scans. I saw this buy signal. I didn't take it. And here's the reason why. I know who GameStop is. I think it might have even been in that weekly newsletter, Game GME, as every week when I do a newsletter, guys, I put out what the buy signals are. And I think I had GME in there one week. And I just didn't take the trade. And the reason is because I know who the hell they are and know what they do. It's like buying blockbusters before the ship sinks. But, you know, I didn't understand the Reddit community at the time. That was pretty powerful. Anyway, as far as the market technical analysis reflects human emotional behavior and money flows. The relative strength started to improve. PPS started to buy. So my system and strategy of how I teach you to trade, I mean, literally, when the market is above pivot, pivot acts as, you know, the blue line. That's why we've created this. And the relative strength starting to outperform the market, and there's an uptick in volume. I just shared that with JetBlue. It's it's a green go-to thing. That's pretty, it's nice to see. I didn't take the trade. I didn't, be honest with you. I didn't take this trade either. Should have taken that one at the end of the month. In February. Here's a PBS buy signal. I wouldn't have taken that trade to begin with. The relative strength would have been bad, not good. The volume was picking up. But what about in here? By this time, I know it's a battle between a hedge fund and the SEC might get involved and blah, 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 blah. And I got to tell you something, gang. This is not something that I'm going to probably wanting to be have chased. But if you guys want to use the indicators that I'm teaching you on how do you use maybe accumulate volume trends and relative strength, if I amend my ways of being stubborn and saying, John, maybe I should be looking at this a little bit more carefully. We have a better edge. Would I buy $10,000 worth of stock? Not a chance in hell. Why? Because it could change on a dime and a heartbeat. We could see voids. We could have a game rule change. They could have a lockdown. By the way, everyone sitting here with me today, you know this is a fact. Don't sit there and think that Greenpeace, not Greenpeace, you know who they are, Robinhood, the Greenpeace, out to save the world investors. Greenpeace traders or the Reddit crowd trading on Robinhood platform. They didn't shut down. It was TradeStation, Interactive Brokers, Tasty Trade, Thinkorswim, Tastyworks. Everyone shut down and stopped that insanity back then. It's just only Robinhood got their wings clipped and slapped around because they continued to do some, restrictive trading. Anyway, I know the story behind this. This is more fascinating. It's not my thing, but if it's your thing, these indicators are powerful and will help you because they're working. I mean, so here's a 15-minute, here's a 5-minute, and I mean, there's your volume trend. So there's people packing on this trade. Here's your relative strength even working. I just don't know about holding positions, big positions overnight in it. Anyway, I did want to get through the insanity that I think is when we do these monthly meetings is to bring up what the issues du jour are. And right now we have wild volatility, and we have internet potential issues, and you're going to have platform potential issues. So today's PUG meeting was designed to, hey, how do you get through some of these trades that a stock shouldn't be hard to borrow? I shouldn't have a problem trading. Reach out, call them, talk to them. Here's the guy to do it at again, TradeStation. 2, how do I trade these signals? Like in kind. If you know what SQQ is, okay, fine. Then sell short the Qs and don't take the SQQ. Or inverse. If the SQQ is a buy, then it's a short on QQQ and vice versa. Next, how do I look at judging stocks and finding opportunities besides running the scans? Top-down approach. And then finally, divergences using the, and again, the indicators and supplying confirmation of the condition of the price action. Prices that go down with heavy volume is not a good buy the dip strategy. Prices that go down and you have relative strength convergence and volume convergence, inversely, stocks that go up that have divergences, you want to avoid. And the tools that I've created help illustrate this, I think, in my humble opinion. I didn't invent relative strength. I just invented a better way of looking at it. And I think the same could be said with all the other indicators that I've come out with. And again, I don't make a new indicator every day of the week. It's just not my business. I find the ones that work for me, and that's the ones I stick with. I hope today's presentation was worth your time. It was certainly worth the admission price. That concludes the session that we have to spend together. And I hope you found a little bit of at least reaffirming, are the indicators working still, and are they reliable? And I think you'll find that the answer, in my humble opinion, is yes. And I can say that by just looking at some of the performance figures and what we're doing with our stock trading, at least for right now. Knock on wood, that continues for the rest of this year. So thanks a lot, Thomas L. AMC, I'll do that real quick and just share AMC. There's AMC, same. I mean, if you look at, here's your buy signal right there. It's on an uptick in volume and the relative strength's going up. I mean, that's a 5-minute chart, gang. I'm looking at a 5-minute chart. Here's a 15-minute chart. Gave a buy signal back on 12 o'clock noon on Friday. Didn't do anything. Had followed through. That's not going to generate a new PPS buy signal because it's already in one. So look at the last known signal when you see the market gap up. At that point, what's the progress of the market? The relative strength, it's outperforming the market. They jumped on it. Here's another buy signal. They jumped on it. Volume is upticking. Relative strength at that point in time was weakening because the stock did what? Nothing. And then all of a sudden, relative strength outperforms. There's AMC. These are tools available on TradeStation. These tools are available on Thinkorswim and HGSI. I really thank you very much, guys. Thanks, Julianne. And I will see you guys at the next PUG meeting, or for our members, I'll see you in the live trading room tomorrow. Have a great evening. Thanks for joining me. This recording should be available probably by tomorrow morning at the very, very latest. Everyone, peace to you. I wish you well. God bless. Seriously. Thank you.